Said I will be magnificent, I will be better than I ever been. Yeah, I will amaze me. True to myself, they can't change me.
All right, well, we're going to say welcome to another episode of Build a Better Business with the Floyds.
Let's go.
I know, we're super excited. Today we're going to talk about a conversation that has been going around a lot. We are days away, actually, from a new presidential election. And, it seems like everyone is just going crazy.
Yep. Everybody's trying to figure out who to vote for.
I know.
And how does it affect them?
I know. It's such a big deal, in between. All right, do we go with Trump's plan or policy? Do we want another 4 years of Trump? Or do we want to give Kamala, I try to say her name, Kamala. Look, she made sure you know how to say her name. So at the convention, she made sure you know how to say her name is Kamala Harris. Yes. But anyway, so in regards to that, who do we want to vote for? We're not going to share our personal opinions in regards to that. But what we're going to do today is we're just going to share the facts, things that we know.
Pretty much, how does it affect you?
Yeah.
Because everybody's different, different tax brackets. So depending on who you vote for, it's going to affect you different.
Yeah.
Whenever that president gets into the House.
Absolutely. So I guess the best place to start would be is where are we now? Okay. Yeah. So we're still literally under certain, tax. We're under certain tax. I would say plan, or we're still under the Trump administration.
Yes.
Yeah, we're still under his plan where things are still working and in operation now. But when 2025 comes, everything is going to expire. Well, a lot of them are going to expire now. It's going to be either if Trump is in house, things are going to be extended, or if Kamala is elected, then there's going to be some new policy. So let's talk about it. So right now, when we look at the current tax breaks that we have, let's look at some of the current business tax breaks that we have. So right now, you have the corporate tax rate, which is 21% flat rate. Now, we had a friend who loves that.
Oh, yeah.
Yeah, we have a friend who personally loves this. They're a doctor. They have their own practice, and they love when they put in effect the 21% corporate flat. He was preaching that to everyone.
Because it was like 35% before,
right?
It
was 35% before.
Yeah.
And under the Trump administration, they actually lowered it. He really rallied for that and pushed that down to 21%, which was a big deal. But another thing that was a big deal was the QBI deduction.
Oh, yeah.
Yeah, so if a person is not familiar with the QBI deduction, what that is all about, that just stands for qualified business income deduction, and that's 20%. So if you have a business or a small business, you actually got a 20% deduction on that, and that was just like amazing.
Yeah, so that's pretty much, whatever your income is, you make $100,000, you pretty much get $20,000 deducted from the income, and you only get taxed on $80,000, right?
Yeah, something like that. So it's a deduction that we get that it just looks beautiful, when you look at everything, because it's an additional deduction on top of the other deductions that you're able to take for your business. So
I'll take that.
I would too. Well, we've been taking it.
Yeah, we've been taking it.
Yeah, we've been taking it, and so have our clients as well. They've really been enjoying the benefits of that, whether they realize that they had that benefit or not. Another one that was actually really cool was the increased depreciation. Now, we love that one for sure, because this is something that you're able to take advantage on, whether you had real estate or if you had equipment or
your vehicle.
Yeah,
that was the best one right there.
Yeah, so basically, just so folks can understand how that works, that was just simply if you have, let's use the vehicle for example.
Yeah, that's
so
the most
if
popular.
you have a vehicle and you put it in use for business, you were able to take a percentage or depreciate a percentage of that vehicle as a deduction on your taxes for business use. Mm-hmm. And so we always encourage people, if you're going to do that, of course, you want to document it. You want to be smart about it and make sure you're actually using it for business. Mm-hmm. And then if you happen to use it as well for personal use, you have to make sure that you can be able to decipher the difference between the use.
Yes, and pretty much what Trump's, when he introduced in 2017, is Code 179. And it allows you to depreciate up to 100% of that vehicle, all at one time.
I know, yeah.
And we want to keep that.
So we do want to keep that.
Because we both upgraded our vehicles.
Yeah, I know, we do. I know. That's an excellent deduction. We've had a lot of clients that actually took advantage of that deduction, because that one was amazing. But there was another one that I thought was actually really cool, which I didn't realize. Did you know that the standard deduction, so I knew the standard deduction rate increase, but I didn't know what it increased from. So back in 2017, at the single tax rate, the standard deduction used to be $6,300 in 2017. Did you know that?
I wasn't even aware of that.
No, I didn't know that either. So when I look, I'm like, wow. So it was literally $6,300, but in 24 this year, it's actually going to be $14,600.
Yeah, that's a big old.
That is big. Yeah. That is huge. So the goal is we want people to be able to maximize on their deductions and to be able to get as much savings as possible and save some money, because at the end of the day, I feel like we work too hard.
Yeah.
You know, we work hard. You know, we're trying to make a living for our family. We're literally trying to, you know, live the American dream, I guess you can say, right? But it's difficult when you're trying to accomplish your goal financially and then you have to pay so much in taxes. It's actually disheartening, in my opinion.
Yeah, that was pretty much the trap we ran into. We wanted to get to six figures, and we wasn't, you know, aware of the taxes that came with it.
No, that was our first goal. We like, we want to go. I remember when we were young, we first got married.
Like, you got the six figures, I got the six figures. Like, yes, and then tax time came, and we didn't get a refund. Matter of fact, we owe a lot.
I know. We didn't know what was going on. But the thing is if you have those aspirations where you want to grow in income, you want to get, because a lot of this, when we look at Kamala's plan, a lot of this is kind of geared towards the higher income. Yeah. So that's something that you have to think about. So I want to just kind of explore some of the things. So I'm going to start with Donald Trump and some of the things that he wants to initiate in his tax plan. The first thing he wants to do is the current tax plan that's in place now. He actually wants to make that permanent.
Yeah, so pretty much all the tax breaks we get now.
Yeah, he wants to extend that. He wants to make that permanent. But he actually threw some new things in there. He threw in there that I like this, actually. No taxes on tips.
Yeah, I agree with that, because most people ain't going to, you know, if you give me $1 or $10, I ain't going to report that.
Don't say that. Yes,
that's
you
just
are.
Me, though, you know.
No, disclaimer, you are going to report that.
Okay, yes.
Yeah, you gotta. No. So, but I think that's pretty cool. So that is applicable if you are a business owner and you receive tips. You know, that's usually hairdressers or, you know, barbers or just folks that's in the service industry where they get tips. They don't have to worry about the nuances of,
even,
I gotta,
you know, I can imagine a waitress, you know, they getting a $10 tip, or somebody want to bless them and get them a, you know, $50 to $100 tip.
Yeah.
And they got to pay taxes on that money that they just got tipped on.
Yeah, I know. So I think that's amazing. I think Kamala's actually on board with that as well. That's something that she's suggesting in her tax plan as well, where no taxes on tips for service professionals or even, you know, business owners that is in the service industry. There's no taxes on that. So I think that is pretty cool. I like that a lot. But another thing under Trump's plan, what he's suggesting is he's also suggesting no taxes on overtime pay.
Oh, yeah.
And so I think when I think about that, in all honesty, a person who is working overtime, they're doing it because they need extra money. Yeah. You know, they have a certain goals. Maybe they're trying to pay off some debt. Maybe they're trying to do certain things, you know, financially. And they are sacrificing their time to get that overtime pay. And then it kind of sucks a little bit that, you know, you put in that extra time away from your family and then you got to pay taxes on top of that. So I think that is very beautiful. The simple fact that you can be able to do that, make that extra money so you can be able to accomplish your goal even faster, and you don't have to worry about paying taxes on that.
And I use an example, you know, as an air traffic controller, we went from, you know, working 12 hours a day to working 24 hours, you know, shift. So people went from making $100,000 to like $150,000. Right. And long story short, you know, usually they would pay $10,000 just to break even, you know, to not pay any taxes. But now they paying $15,000. And they still owe like $200 to $300, you know, because they came up short. Right,
yeah. So I think that's wonderful. Right now, there's no information on the Harris team in regards to that. I'm not sure if that's something that they will adopt, but if they do, that would be super awesome. I think at the end of the day, you want to help the American people. You know, when the American people are working hard, you know, what can we do, you know, as a country to be able to help those hard workers out there that's trying to provide for their families. So I love that.
Pretty much it went up a lot. When inflations went up a lot, people start working more to make ends meet.
Yeah, and it's actually a good incentive. It's a real good incentive to employers. If you're a business owner and you actually have like certain jobs or deadlines that you need to meet, and you want your employees to put in that extra time to help you meet the, the goal or the whatever you need to do, it's nice that they have that incentive where they can work overtime and they can be able to keep all of that 100%. So I think that that would be very advantageous for a business owner as well for the employees. So I love that. I hope that that really do go into effect because I think that that would be simply amazing. Another thing that the Trump administration is proposing is they're actually proposing to decrease the corporate tax rate. So now we got to think about this because this was something that Trump rallied for in the first place. He rallied and brought it down from 35% to 21% flat corporate tax, but now he wants to bring it down even more. He's trying to bring it down to 20%. And then I believe that he wants to give you the opportunity where it can actually be even lower to 15% if you make your products in the U.S. So I think that,
we might have to consider changing to
we're not in the product business. We're in the tax business. We do taxes, so we don't technically have any products, but I would take, 20%, flat rate. I don't have a problem with that, So, I think that's wonderful. So, but yeah, so those are some of the things that he's proposing. So essentially he wants to keep what is already in play. He want to make that permanent, and then he has a few other nuances that he wants to incorporate. And I think that they sound amazing if you're thinking about ways to be able to save as much money as possible on taxes. But now let's talk about Kamala. She has some things that she wants to incorporate as well that I think that would be amazing as well. It just depends on where you are on this scenario. So one thing that she wants to put in play is she wants to do the business startup deduction. So right now, what happens if you are a business owner, you can deduct up to $5,000 of your startup costs. So you start a business and let's say, for example, you invested $20,000 in that business. Well, when you do your taxes, you can be able to write off $5,000 of that in the first year, and then you can roll over that, over every year, 5,000 until you use up that whole amount that you spent. But with this, what she wants to do, if she increases that to 50,000, that means that a person can be able to write off the whole entire amount that they invested in the same year, which I think would be amazing to get people who have business ideas, business dreams out there. This will be a good encouragement to go ahead and get it started. Or if you are a W-2 worker and you're in a high income, then basically this gives you an opportunity to kind of start that side gig that you've been thinking about anyway, or you're probably doing anyway, but you can actually make it official, and then you can be able to take that deduction, maybe take a loss for your business that year and be able to lower your taxable income. So I think that that's pretty cool.
Most businesses that start, they end up spending more than $5,000 anyway, so it's more beneficial for them.
Yeah, it's very true.
I haven't seen a business that's less than $5,000 to start up.
No. So I think that that's pretty cool. Another thing that I think why this would be interesting is because, I think this would be because we're advocates for people starting businesses. We are, because we understand at the end of the day, businesses is not just the backbone of our country, I feel, but it just does so much to our economy. It provides jobs, provides opportunity. It just does so much. And so I think that this would be a good incentive to get people to go ahead and get started with that. So I do like that. The only I'm sorry, what you gonna say?
No, I was going to say, when you have a business, it's more beneficial for tax breaks. If you got a W-2 job, it's certain things that you can't do. But when you got a business, you get more tax breaks for your business office, your vehicle. You can't do your vehicle with just a W-2.
No.
So it's more beneficial to have a business.
Yeah, I agree. Yeah. Absolutely. So I think this would be excellent. I think the only catch to that is this is incentive for people who want to start a business.
Yeah.
But it's not applicable to those who already have businesses.
Yeah, I'm like, what about us?
I know. You have like 70 million folks, small business owners out there, and this isn't applicable to them, but this is a good encouragement for those who are interested in starting a business. So I do like it. I like it. Now, this is something that's interesting. So we talked about under the Trump administration how he wanted to lower the corporate tax rate, but under Kamala's plan, she actually wants to increase the corporate tax rate. She wants to increase it from 21%, where it's at now, to 28%. But this is supposed to be on those who are, well, no, that doesn't matter actually, because this is the corporate tax rate. So it doesn't even matter if it's if you have a small corporation, for example. Mm-hmm. So the average, I think we were looking at the studies, the average small business probably makes $73,000 a year. Okay. So think about this. Say you have a small corporation that you started and you're only making $70,000 a year right now, you know. You gotta literally pay 7% more on taxes on that corporation, regardless of the size. So this is not just applicable to, you would think that this would be applicable to like just the big, you know, the big box companies out there. Yes. But this is not. This is applicable literally to anyone who has a corporation, a corporate business. They got to, you know, deal with that increase on that. So I don't really know I guess I do know what the reasoning behind that, you know, 'cause when you're doing incentives like the $50,000 startup credit, when you're doing the first time $25,000 first time home buyer credit, when you're doing all these credits, this money has to come from somewhere. It has to get paid. So I think in her plan, what she's doing is she wants us to pay for it. Yeah, that's what it sounds like.
So her plan is pretty much to take more money or tax the higher income. Yeah. More. So if you make over $400,000, she wants to tax those individuals. If you make under $400,000, yeah. She says that you won't be affected. So it might be some of the stuff that's currently available. Right. She might keep that in, but if you're making more than $400,000. Then you're gonna, you know, should expect to pay taxes.
Yeah, I understand. So let's unpack that a little bit because I think, me personally, I don't feel like that's fair. You know, so because to me, and I don't know, I can't speak for everyone, but it just seems like if you make a certain amount of money, you know, you have to now be penalized because you're successful. Yeah. And I don't understand why that's fair because think about it. If businesses is the backbone of our country, think about that. So if you go out and you become successful, you have a very successful business and say you have $1 million business and you have employees, your business is doing well, you know, and is helping with, you know, lowering the unemployment rate and things of that nature, and you're actually contributing. But when the government puts in play that, well, although we appreciate what you have done, we still feel that you need to pay more in taxes to kind of make the whole thing works, you know, for our economy. To me, that doesn't sound fair.
Yeah, I agree with that because even their 5% in taxes, let's say they're paying, you know, 20% in taxes for the corporate, their 20% is still more than the lower income. So they're still paying more just by paying that 20%. Right. So to push it up to 28%, they're paying even more than what they was paying before. Right. So either way, they're paying more, you know, so I don't think it should be raised any more than that.
Yeah, and to be honest, there's other ways that they could be able to, if they need to help with the deficit or whatever it is that they need money for, there are ways for them to be able to get that money, but it doesn't have to be on the higher income back in a sense. So
and then with the higher income earners, the businesses, they're pretty much going to come up with ways to write those off anyway, to keep from paying those higher taxes.
Right, of course, absolutely. So another thing in regards to increase on corporate tax, there's also an increase on long-term capital gains. So this is interesting. This is also under the Harris plan. What she has said, and I actually watched this when she said it, she said that she was going to increase the long-term capital gains from 20% to 28% for individuals whose taxable income is above $1 million. That's that same thing again. Like, you make a certain amount of money, you got to pay more in taxes because, now I actually thought that was, I guess maybe I've gotten used to it. So 15-20% for long-term capital gains. Mm-hmm. So what long-term capital gains is basically you invest and your money grows, it appreciates, whether it's in real estate or if in stocks or whatever you're investing in. And let's say that you have invested $10,000 and you've kept that $10,000 in an account or in real estate or wherever you have it in for over 12 months or over a year. Yeah. And so long-term capital gains is, let's say a year later, that $10,000 investment is now worth $15,000. Now you sell, the stock or the real estate or whatever it is that you have a $5,000 capital gain. And so since you held it for over a year, it is considered a long-term capital gain. It's eligible for that, which you can be taxed at traditionally at a lower rate, but in this case, they're looking to increase it up to 28%. So that $5,000 would now be subject to a 28% tax rate.
And that's a generous, compared to the, example you just gave. So imagine somebody that bought Bitcoin at $10,000. And then now it's $69,000.
Oh gosh!
So imagine their tax rate.
Yeah. So. Oh my gosh! Yeah, Lord, don't why you even say Bitcoin. I still, my gosh, I got Bitcoin stories.
They're gonna feel it.
Oh, what a missed opportunity on Bitcoin! Goodness gracious. So so I just think that's I don't want to give too much of my own personal opinion. Yeah. But I just I don't think it's fair. That's all I would say. I don't think it's fair. Another one now, I'm hoping, Congress, if this is the case, if Kamala gets in office, okay. But I hope Congress do not pass this one. This is the one where they're talking about the unrealized capital gains. So the unrealized capital gains, she said this. Now, I heard her say this. And I've been watching closely. So she said on unrealized, they want to start taxing unrealized capital gains on the wealthy. But what she threw out there, she said, if you make over 100,000, Lord, I wish, over 100 million. Mm-hmm. If you make over 100 million plus, they want to tax unrealized capital gains. Now, this is like crazy.
So you saying that, let's say go back to Bitcoin again. Uh-huh. I bought that Bitcoin at $10,000. Now it's worth $69,000. Even if I don't cash it in or sell it, I'm gonna get taxed on money that I don't have.
That's right. Yeah, I heard somebody.
So how can I get the money that I don't have?
I don't know. Well, I've heard somebody ask the question. They said, "Well, if they're taxing unrealized capital gains, then do I get a tax deduction on unrealized capital losses?" To me, that sounds fair.
That sounds fair to me.
That sounds fair. But to be honest, I kind of feel like I'm giving my opinion. Goodness, not. I wanted to stay away from that, but like I want to shy away from that so bad. But to me, that feels greedy. Yeah. Like how can you tax something that a person hasn't even realized yet? And I understand, because there's a whole play that the wealthy does, in regards to like their stock portfolios. So imagine they have $100 million, over $100 million in their portfolio. Yeah. Of course, they're never going to realize that because they can be able to borrow against it if they need some liquidity. So, I understand it's a smart play, and the government's like, listen, you're going to have to start paying taxes on this money. They're trying to figure out how to make them pay taxes because as long as they never touch it, when you borrow it, that's not a taxable event, you know. So they're smart.
Yeah, it is.
But it's still reaching, in my opinion. Like
they just following the rules.
Yeah, true. But that's reaching when you're saying, "Oh, we're gonna start taxing unrealized capital gains," because then that means you should be able to get a deduction if you have an unrealized loss. To me, I don't know. I just feel like that's a little bit too much. I'm not opposed to, some of the things that she is proposing, but I do kind of feel like that maybe, and I want to give her the benefit of the doubt, because I mean, I like her. I want to give her the benefit of the doubt. I think maybe because she got into the race in the 9th hour, maybe, she had to put something together real quick.
Yeah.
That's my benefit of the doubt. I don't know.
And then these are just a wish list, so it still may not get passed.
Yeah, that's true. Because at the end of the day, Congress has to approve it. If they do not approve this, none of this, neither one of their plans will go into place if Congress don't approve it. So that's it. So I think that's enough on that. So if you want to know more about this, just you can be able to unpack this a little bit more. But of course, election is coming around the corner, so make a wise decision, or just make a decision that's best for you.
Let's talk about one more.
What?
That's Social Security.
Oh.
let's talk about that Social Security.
Oh my goodness. Okay, so we'll end with this on Social Security. So go ahead.
So with Social Security, right now, let's say when you start working, I've been working since I was 16, and I've been paying into Social Security ever since I was 16. When it's time for me to receive my Social Security, I can be taxed 50 to 85% on that Social Security that I receive. So that means I can only get like 15% of what I've paid into Social Security. Is that fair?
No, that's not fair. So basically, what you're talking about is you're talking about the difference on. So under Trump's plan, he's saying that he wants to not tax Social Security. And then under Kamala's plan, she hasn't said anything about that, actually. So like I said, giving her the benefit of the doubt, maybe she has not just gotten to that point. But I do like the fact that Trump addressed that and that he said that he wants to no longer tax Social Security, because I do feel like if you're going to work, all these years and pay into it, and then if you're a business owner, you're paying self-employment tax, which self-employment tax goes into Social Security. When it's time for you to collect that, it seems as though that it will be reasonable and it will be fair that you can be able to collect that and you don't have to worry about paying taxes. So, I think that, so make your decision. Whatever you decide, just go out and vote.
Yep.
It's up to you, but all we wanted to do, since we like to encourage business owners, we just wanted to lay it out there for you so you can make your own decision. But at the end of the day, we just thank you for listening again to another episode of Build a Better Business with the Floyds. And, I forgot to mention, we have a course. We have a business course that we're going to be giving away absolutely free. If you want to know more about that, subscribe to our YouTube channel, leave us a comment, and we will respond to you on how you can access our free business course. If you're an aspiring entrepreneur and you want to know more about how to get your business off the ground from A to Z, we have a free course for you that we'll give to you absolutely free. All right. Until next time, what do you like to tell our people?
Listen, apply it, and learn it.
Absolutely. So until next time, thank you for listening.
I will be, yeah. I was born to be magnificent, everyday great, far above average, maverick, no magic. His faith and works, his blessings is the perks.